But still, the deficit projections are much higher because the CBO was scoring all of this benchmarked against the prospect that the administration was serious in 2017, that these tax cuts on the personal side were going to expire at the end of this year, but obviously kick the can down the road. The problem is not so much the deficits, it's financing deficits at a time when there is a lack of confidence in the investor base on US economic policy. That's the primary issue. When you start, even if the administration is right that the rest of the world have just been rip-off artists for decades and decades, it has to be remembered that they have been funding these deficits to a large extent and funding other aspects of how corporate America is financed through the debt and equity markets. That tends to be forgotten. So I would say, yes, this is a very complex situation, but financing large-scale deficits at a time when you rely on foreign investors and they are losing confidence, which you're seeing, by the way, in the behavior of the US dollar, that is a risk for the treasury market, no doubt about it.